Good afternoon and welcome to AROBS Q3 2024 results call. My name is Zuzanna Kurek and I am Investor Relations Manager at AROBS Transylvania Software, and I will moderate today's call. Before we begin, I would like to mention that this call is being recorded and that the recording of this teleconference will be uploaded on AROBS website by tomorrow the latest. As stated in the call invite, by joining the video conference, you automatically and implicitly consented to being recorded. If you do not consent to being recorded, please leave the call. Firstly, I would like to introduce the management team that is here with me today and will present the Q3 2024 results. I am joined today by Wojciech Pran, Chairman of the Board of Directors and the Chief Executive Officer of AROBS, Bogdan Ciungradi, Chief Financial Officer, Aurelian Diaconu, Executive Director Software Services, Ovidiu Bojan, Executive Director Software Products, as well as my colleague Christian Prevenda. In terms of organizational aspects, we will follow a standard call setup, which means the management will deliver a presentation outlining the Q3 2024 results, and later we will have a Q&A session. Please note that all the participants should remain on mute. If you would like to ask a question, please type it in the chat box. Feel free to do it during the management presentation, and we will answer all of the questions in chronological order as soon as the presentation of the management is over. Last but not least, as always, I would like to mention that we might be making forward-looking statements today and that the actual performance of AROBS Transylvania and the actual results may differ materially. We encourage you to review the disclaimer that we have included in this presentation, which you can see right now on the screen. This disclaimer applies equally to all the statements made in today's call. We are now done with the introductory part, so we can kick off the call. I would like to now pass the floor to Wojciech Pran, who will share with you some key insights about our performance in Q3 2024. Wojciech, please.
Hello, everyone. Thank you very much for this investor conference. I would like to underline a few aspects and challenges and opportunities that we experienced in Q3 2024. Mostly, the big element is adapting to an uncertain market that we see right now. There are certain delays in electrification investment, and we saw increased cautions among customers, passing investment and delaying investment in the electrification area. On the other hand, there are projects that are going pretty well in the automotive industry, and we see investments in like automated driving or intelligent driving. However, there are some delays, and we see some uncertainty in the automotive, as we said, so we cannot forecast for sure what will happen with the automotive industry in the near future, especially because software services sector and our partners there are adapting a shorter, less predictable approach to their contractors like we are. Talking about opportunities, we do have various opportunities, especially in the cybersecurity, AI, RPA, and data engineering. And of course, we have the R&D initiatives. And I would like here to mention the few projects where we got even some prizes with RPA and artificial intelligence, with the Chartered Accountant of Ireland, and also with in other areas. So if you follow us on LinkedIn, you will see also you saw some of our achievements, and also some of our ongoing initiatives. Talking about R&D, I guess We can also mention some projects about aerospace, the Crimson project, that it's a dear project to me, despite that it's under 10% that requires transparency to the stock exchange. But it's a joint venture between our office in Bucharest and the one in Poland. It's a very interesting project, very demanding. On the other side, it's highly rewarding from the point of research and development. On the other side, I would mention the medical field, where we do have KeborMed, a US partner, where we innovate together with them in the area of medical. We continually focus on innovation and enhancement of our services and product. We try to adapt AI and different optimization for all our projects. One of the other opportunity that is also important to manage is to mention, it's merging AROBS Engineering, NordLogic, and Berg Software into AROBS Transylvania Software by early next year. That will save and give us some more cohesion within these acquired companies. In Q3 2024, I would name it a quarter of optimization, and AROBS optimize its cost structure with the following element: a 4% reduction in the cost of software services, totaling 61 million in Q3, compared with the 64.4 million in Q3 2023. This decrease is also notable compared with Q1 2024, where these costs were 66.5. So we'll elaborate a little bit further with this. The streamlining of the software marketing department, resulting in 11% of reduction in expense, reaching 5 million compared with 5.6 million in Q3 2023. We also have a decrease in G&A expense, reaching 16.3 million in Q3 2024 compared with 18.2 in Q3 2023. And optimization of personal cost by 9%, like-for-like decrease compared with Q3 2023, excluding the company that we acquired in 2024. That led to a total of 55.6 million in Q3, along with a 16% like-for-like decrease compared with Q1 2024. So as you see, we compare the Q3 2024 with Q3 2023 and with Q1 2024 to see the evolution. And not at least the substantial decrease, 47% in the employee stock options plan, from 6.5 million in Q3 to 3.4 million in Q3 2024. So overall picture, it's the optimization, and we try to adapt to the continual market challenges and evolution. Those are here are some key indicators that are important for you to see. 306 million RON with -5 compared with 9 months of 2023, and very at the same level of Q2 2024. But what is really important, the normalized EBITDA that reach 49 million, 16% margin, versus 43 million, 14% margin, and as an increase is 21% versus Q2 2024. That's a really good news. Talking about net profit, we have a normalized net profit 22 million, 7% margin, and a net profit of 16 million, 5% margin, with an 83% versus Q2 2024. So you see the effect of optimization and the facts that we are doing the best we can to preserve and to increase the EBITDA and net profit compared with the previous quarter. Segment highlights. I would like here to introduce Aurelian Deaconu, in charge with software services, to present the results and some key factors.
Thank you, Rocco. Hello, everyone. I will try to be brief, and I will start by saying that I'm pretty sure that it's not a secret for somebody that we have faced a tough environment for the previous 9 months, if not more. The basic element that it's common among the many industries where we are active, among the many clients that we are serving, is the conservative posture that they have adopted. And I think it's pretty much related to the kind of budget conservation that they have been very concerned about for the past 9 months. So many projects that they were considered to be strategic are now delayed or unfunded for various reasons that I've already said. Maybe it's pretty much related to the kind of conservation related to the budget, concerns. That's pretty much the kind of common note among the many industries where we are active. And by far, we were hit by the automotive challenges that, again, I'm pretty sure that all of us are well familiar with. And that for us was a very important key vertical. And with this current turbulences, we are now facing a lot of, challenges. Still, I think overall, 6% decline compared to the previous year. It's not that bad, and it's the merit of also organic efforts or organic results of us, but also because of the results brought by us by the acquisition that were made for the past period. In terms of the cost, that was by far our main focus. Cost meaning the fact that we want to have a posture where we are much more well suited for the next period, and having in mind that the vast majority of our costs are related to the personnel cost. That was our main focus. So here I invite you to note that we have a 19% decrease versus the Q1 2024, and that's substantial, because we should not forget that because of those tax incentives that were decreased at the beginning of the 2024, we actually entered this year with a ballast of costs, so to say, with higher costs than the, let's say, previous quarters. So this is a notable optimization of 19% in terms of the cost of the personnel. And that, I think, we are going to put us in a position where we are much more sustainable in terms of our operation and our posture regarding the next phase, which is affected by, obviously, uncertainty. In terms of what we have done, we have doubled down our effort to acquire new opportunities in various markets, but also to the new verticals. And of course, we want to ride the mega trend of AI. On this note, we have a lot of initiatives, internal initiatives and discussion with clients. That's something that we cannot say for sure if we are going to be able to monetize or not, but definitely we want to be prepared and we want to be well equipped to face those or to serve these new opportunities. Cybersecurity is a space where we have made a lot of effort, and our effort start to produce some results in terms of providing a sort of cybersecurity as a service. And I'm pretty sure that for the next period and for the next years, I'm pretty sure that this vertical will grow and will be a solid revenue stream for us. In terms of what we want to do in the future, of course, innovation, it's in our core, it's in our backbone, and for sure we want to be part of the innovation, be it on the software services side, but also to spun off various initiatives that will maybe result in new products. That's pretty much the picture for the 9 months of 2024. I'm happy to dive into more details and happy to address any question that you may have. Thank you.
Well, talking about software products, which is the area where we have also the annual recurrent revenue, how we name it. It's an area where I would like to introduce for the first time in this call Ovidiu Bojan, in charge with the software products, where he will express few words about software products. Ovidiu.
Hello everybody. Regarding the software products, we can say that for the first 9 months we increased by almost 40%, and this is especially in fleet management business and hardware solution, and this is in line with all our projection for this year. In software products, the most important thing is how many subscription you add every quarter, every month. And for this, what is important for us is that the annual recurrent revenue for the software products, it reached almost 80% of our turnover. Adding this year more than 600 new customers into our platforms. With an average terms of contracts for 2.5 years, it putting the base for a continuous growth for the next year and the next 2 years. But it's more important to know is that we are in the very favorable context to grow for 2025 and 2026, especially due to the legislation. For example, this year we added new services into our platform for e-transport. For example, we adding new services for Tahoe Analytics, for international transportation and fleet managers. Of course, we continue to look for the new opportunities, both internally and growing organically and through acquisition. And we are looking into the new markets for Central East Europe. We will talk later about figures, yeah, and if there are some questions, I'm here to answer. Thank you.
The next area that I would like to present myself is the integrated systems. Actually, we are talking here about business to government, and as I mentioned previously, the business to government is affected by delay projects. In the first 9 months, 2023, the segment generated about 10.1 million RON in revenue, compared with the same segment with 3.1 million in revenue as we speak now. The key projects include those funded by PNRR, National Resilience and Recovery Program, that were postponed, impacting, of course, the overall revenue. Initial expectations were for this project to start in Q4, but it seems that many of them will start at the beginning of new year. Delays in this project are the primary focus in this year, reduced total turnover. And of course, if there are delays and movement for the next year, the level of business to government segment, that is the third segment that we cover, is unpredictability, I would say. We hope the election will be soon over and the new government will be in place. And hopefully, starting with the new year, we'll advance much further with the integrated systems. Thank you. For the consolidated financial results, I would introduce Bogdan Ciungradi, our CFO, to present maybe the figures, all the figures. So please stay tuned.
Thank you, Voicu. Good afternoon, everybody. Thank you for joining our investors call. In the first 9 months, the group reached a level of revenues of 306 million, minus 5%, compared with the last year, similar period. Different dynamics we see on the software services with minus 6%, but software products having plus 14 and integrated systems minus 70. The fact that we have multiple growth pillars is helping us to offset the decline in revenues of one segment, or partially offset the decline in revenues of one segment with the growth in another segment. However, the total decrease in revenues had an impact also in gross profit, which decreased by 15%, and the gross profit margin which shrink to 22% for software services from 26%, and for the software products 52% compared with 57% last year. I would like to dive in a bit in the quarterly performance because Q3 is a turning point from our point of view. We managed to have only 1% decrease in terms of revenue, so steady revenues now, but with a significant improvement in EBITDA, both in absolute value, growing from 12 million in Q2 2024 to 14.6 million in Q3. But more important, the EBITDA margin coming back to a 15%, which is a similar EBITDA margin compared with the third quarter of last year. Looking at the turnover evolution quarterly by segments, we see that software services now are almost equal to Q2, so 79.2 million compared with 80 million, while in the software products we see continuous growth. Last year we have not a steady revenue growth from one quarter to another, but this year we managed to deliver a continuous growth. In terms of integrated systems segment, similar revenue level in Q3 this year compared with last year. Analyzing our performance by splitting the group in two parts: organic, which means companies which were growth by us, compared with the companies acquired, M&A. This year we have a new mini group joining our AROBS group, which is Infobest from Timișoara, with operations in Romania and Germany. Their financial performance, it's consolidated starting with 1st of June 2024. The companies acquired the M&A category contributed with 109 million to this year turnover, 103 on software services, but also 6.4 million coming from the software products. The organic business on the software services side decreased by 15% due to the market evolution, and as mentioned by Voicu and Aurelian earlier, while on the software products, organic also grew by 12%.
Here I would like to mention a little bit about the medical sector. So here the medical sector, we see a switch. So we were working on specific projects in the COVID detection equipment, and now there is a movement from those type of devices to different type of devices. So here it's that's why it's also mentioned the medical sector in this. Can go further.
Okay, looking at the contribution of the organic and M&A, we see that out of the 80%, which is the share of software services in total revenues, we have 34% coming from M&A companies and 46% organic. Also, we have out of the 19% of the software products, 2% coming from M&A. So overall, The M&A companies contributed with 36% in our revenues for the 9 months in 2024.
So here it's good to mention that is important that the money from the capital increase, well, not the money, previous money that we got were really put to work in order to grow and to continue grow the business. So as you see, organic is 46%, M&A is 34%. And integrated system, it's still 1% because signing process taking longer than we anticipate, and also that we anticipate more than, well, a year ago when we made the budget for this year.
Software services performance for the first 9 months. I already mentioned about the revenues and the margin. Looking at the cost side, we have a net decrease compared with last year of 1.6 million. However, there are two effects, opposite effects. One is that on the organic side, we decreased the cost by 14.3 million, while the companies acquired brought an additional 12.7 million this year compared with last year. Quarterly evolution, Q3 also for the software services showed us a better performance, an improvement in margin from 21% to 22%. Bear in mind that beginning of the year brought us the salary increases by reduction of the income tax exemption for the IT people, leading to an increased cost. However, overall, we managed to decrease it by 7%, and on a comparable basis, meaning excluding acquisition for this year, which impacted only Q3, we have a 15% decrease, and also compared with last year on a comparable basis, we have a 13% decrease overall of the cost of sales for software services. Software products, as I mentioned, 14% increase in terms of revenues, contribution from all our major lines like fleet management, business optimization, and HR solutions. The contribution to the growth was of the contribution to the top line of the M&A companies was 11%, and to the growth of 1.9 million. We had also an increase in our cost side. This was coming from the decision we took to internalize some of the processes and due to the pressure on the salaries. But also part of the increase was brought by the M&A companies, which brought 1.1 million increase from the 6.4. Quarterly evolution, growth throughout the year, each and every quarter this year, the revenues grew. We had an impact on the profitability in the second quarter when it was the effect of internalizing some of the processes and the salaries adjustment. However, in Q3, we see a comeback of the margins from 49% in Q2 to 52% in Q3 2024. Integrated systems, yes, we are linked to the evolution of the acquisitions in the public sectors, and what we forecasted for this year is shifted mostly to the next year. Looking at the sales and marketing and general and admin expenses, we also took measures to optimize and to reduce the cost. We on a comparable basis, we decreased in the first 9 months by 2 million the cost of G&A. Also, we have inside the cost of this year, we have the effect of customer relationship amortization for the companies we acquired last year. So it's an increase compared with last year of 0.3. On the sales and marketing, we have an increase in the overall cost coming from some of the companies we brought in the group last year and this year. So last year we had the Future Workforce joining the AROBS group, and this year also we have the Infobest group. But also on the other side of the business, we try to optimize and to reduce the cost by 1.3 million. Quarterly evolution, yes, we can see that from one quarter to another, our costs are decreasing, and also compared with last year, we are trying to be more efficient and to stay on a lower cost base. A snapshot of the evolution of the salaries cost and actions we took. Again, we've done the adjustment to make the numbers comparable. So we excluded from Q2 and Q3 the impact of the companies acquired in 2024. In this way, we have a payroll cost of 50.3 million compared with 59.2 beginning of the year. That means a 15% decrease in the salaries cost, but also compared with last year, it's a 9% decrease overall. And on the software services, as already mentioned by Aurelian, on a comparable basis, we have a 19% decrease of the cost compared with first quarter 2024, and also a 16% decrease compared with the third quarter 2023. Some details on the share option program. So the expense, it's decreasing from one quarter to another. We have one of the programs that ended this year. Two other programs, the ESOP 2 and 3 will end in the first part of the next year. The first three programs were covered by the shares transferred of a nominal value from Mr. Opran to the company. And these were those we used to normalize results. However, ESOP 4 was bought back, was covered through a buyback program in 2024. And the result will not be normalized anymore with their impact. This fourth program will end up in 2027. So right now in Q3, our cost, it's 3.4 million compared with 6.5 last year. And it will stay at similar level also for the last quarter for this year. Having all these effects in mind, now we see how we end up the 9 months. In the first 9 months, we reach 43.4 million in EBITDA, which is minus 25% compared with last year. And also a net profit of 16.1 million, which is minus 42% compared with last year. Balance sheet continues to be strong and solid. In July, we successfully completed the share capital increase, which brought us another 143 million to be used mainly for growth initiatives, M&A and Greenfield. But also our cash position, if we exclude the impact of the share capital increase, it is now 95.5 million compared with 87.8 at the end of last year. So we are cash positive. We are generating cash from current operations. Yes, if we want to also use the bank financing to accelerate the growth, we have a very strong total debt to normalize the EBITDA ratio, which is around 1. giving us space to use further bank financings if needed. The evolution of the market this year and the change in the environment has put us in the position to adjust the budget. And I'll start with the top line. So from 495 million turnover, we estimated beginning of the year to 405, which is a mix of trend on the growth on the software products, but with a decline on the software services. We also reflected all the initiatives we took that were already producing effect in Q3 also till the end of the year. And we think that with the continuous program of optimization, at the end of the year, we will be in a better position to catch the opportunities, but also to face challenges of 2025.
Thank you very much. This concludes the presentation of our results for Q3 2024. We will now open the floor for questions. As a reminder, if you would like to ask a question, please type it in the chat box. For the sake of those who will be rewatching the recording of this call, we will be reading out loud every question individually, and then the management will be addressing them one by one. I see we already have several questions. I see the first set of questions is in Romanian. We will translate the questions to English and answer in English since this teleconference is organized also for international investors. So the first question is, although you mentioned that the past year has been very challenging, it appears that in AROBS' case, in recent years, more focus has been placed on turnover to the detriment of profitability and profitability indicators. These have eroded since 2019-2020 and significantly after the stock market listing. How do you plan to reverse that trend?
Well, indeed, we were focused increasing. We were focused especially on increasing the turnover, but also keep an eye on the profitability and EBITDA. And as you saw in the capital increase, we try to secure funds in order to do continual acquisition. There are different options that we are now exploring in both product and services that we acquire. We also had discussion in the integrated services area to expand through acquisition. But talking about rentability and profitability, I guess profitability, it's one of the key areas where we'd like to focus ourselves. So as you saw already, we cut some cost. We try to optimize ourselves. We reduce on different aspects, as you saw from Bogdan mentioning about ESOP, G&A, sales and marketing. There are different measures that we took. On the other side, the cost of the salaries, we are going to work further with this and try to connect the signing of the contracts with cost of what we have.
Thank you, Voicu. The next question, have the massive acquisitions made in recent years become profitable? And do you plan to continue this M&A strategy? If there are unprofitable companies, are you considering closing some of them? I noticed in the activity report that you mentioned the absorption of AROBS Engineering, NordLogic Group, and Berg Software at the beginning of 2025. What exactly does this absorption entail?
Well, actually, of course, we try to analyze everything that is unprofitable company. We try to work, to see if there are chances of their potential for those companies to grow. There are not so many, to be honest. But we are keeping an eye on those. On the other side, what does it mean, the absorption? I guess there are a lot of synergies that are going to be consolidated. And I would like Bogdan to explain a little bit what we are talking about, this absorption or merger.
We started the process of merging some of the companies from the software services area. I'm talking about AROBS Engineering, Norlogic, and Berg. The idea behind is to simplify the group structure, not to have so many companies within the group, and also to eliminate some of the redundancies and activities that are necessary when you have separate legal entities and you need to report monthly and to keep accounting records separate and so on. So this is only the first step. We intend to continue this consolidation and merging companies together within the same type of activity, software services together, products together.
Thank you, Bogdan. The next question, if recent results have not been very strong, why is the SOP policy being continued? Shouldn't the granting of shares be correlated with the company's performance?
Well, of course, there is correlation between performance, but actually the SOP 4 was started a while ago, and it's a continuation of the project. So any new stock options plan will be addressed accordingly in the next period in the board. So and I wouldn't comment. The results are not very good. The results are in line with the market and what we and some other companies are experience during this period.
Thank you. And the next question, is the company actively pursuing inclusion in the BET index? And if so, what steps are being taken to achieve this?
Well, we were in the strange situation after the capital increase. For the first time, there were 3 companies that were fighting for 3 places to replace 3 other companies from the BET index. So actually, we continue to go to pursue that, and we work with our consultants from BTCP in order to address this on the next evaluation in March 2025. But there is an issue, the correlation of free float and the stock price. I guess that will give the indication of if we are going or not going to be in the BET index.
Thank you, Wojku. Now we move to the next questions on the chat. Do you expect further reductions in salary expenses in the software services segment in the coming quarters? If so, how will this be achieved? Redundancies, salary cuts, or more of a combination of the two?
I would introduce Aurelian to reply to this question.
Thanks for the question. I think it's not one size fits all. It's going to be tailor-made. It's going to depend about the market condition and more specifically about the customer. It's going to be customer-driven. We hope that the condition will be now in a far better, more stable, so to say, because now we are at the end of the election cycle and market will become more predictable, or at least I hope so. And it's important to note also that business units have different evolutions. You cannot put on the same basket the automotive challenges with what is happening, for instance, on the financial fintech kind of projects. So it's going to be tailor-made, and we are constantly working on that. We are constantly working on the sustainability with the very important ingredient, which is we do not want to degrade our capabilities to accommodate new opportunities when they will come. And we really hope that the end of this descendant spiral, it's closer to us. And then we are going to see sometime soon, maybe an upward spiral. It's hard to say when this will come, but we need to have in mind that we need to conserve our capabilities. And that is also an important kind of cost factor that it's affecting our results. So in essence, we are going to work continuously to optimize the cost in accordance with the revenue stream that we have. But also we are working hard to conserve our capabilities in terms of serving our clients, current and potential new clients that we are going to accommodate.
Thank you. The next question, did I understand that the project for COVID detection solution has been discontinued or just delayed? What is in the pipeline to replace this project?
Oh, Elian, it's also on the software services.
I think it's important to note that like everything in our life, everything is cycle, including the business cycles. COVID was an upward cycle for this kind of detection, early detection of medical condition, be it the temperatures or whatever other parameters you are going to detect in that case. What we now have as a constant and continuous and coherent program is to expand our presence on the medical devices industry. We have very good conversation. We already have few interesting projects. And I guess the expertise that we acquired during the COVID era can be extrapolated, can be used to a new projects. Just to give you a hint, we are working for diabetes, medical devices that are in use for the diabetes, which unfortunately for the humankind, it's something that apparently it's growing in terms of the customers, potential customer base. So we do see here an important demand, an important future, and we are working towards securing new projects, new opportunities in the medical devices space.
Thank you. The next question, what is the share of the automotive vertical in the overall software service revenue in 9 months of 2024? And the question continues, I will read the full part of it. Who are your key customers from the automotive industry, and could you disclose what is the revenue concentration there? In your annual 2023 report, you disclose one client with a 41% share of total turnover, up from 38 in full year 2022. Is the client in question from the auto industry, German or French?
I will start by saying that we are not going to disclose any name because that it's something that we are bound to regarding our contractual provisions. But let me say that we work with all the important OEMs of the European market and also a few of them from the US market. So let's say global actors. In terms of the overall exposure that we have to the automotive industry, I think it's anywhere between 15 and 20%. This is dynamic. And this is pretty much in dependence of this variation that we have so far. And please note as well that we are not working with one client. We have many clients, multiple clients on the automotive space. And even in the case of the concentration that you mentioned, that's a proxy because beside or beyond that proxy, you have multiple OEMs that we are working with.
Thank you, Aurelian. The next question, can you please comment on the process of integrating recent acquisitions? What is the potential upside from integration after the readjustments of costs in Q3 2024?
Well, I would discuss this. Actually, integrating the recent acquisition, it's a process that we just started, and we'll see the results of the integration in the next period. Readjustment of cost, that's of course an important issue. They are, but I don't think we are going to see them immediately in Q3 2024 in the last quarter. So that's a process that will end probably at the beginning of next year, in the first quarter, most likely. But it's a pretty complicated process as far as I'm seeing, and that requires many consultants, many lawyers, also some also factors that need to be considered in the from the Bucharest Stock Exchange purpose adjustment.
Thank you. And we have one more question that was sent directly to me. Could you please kindly comment on the M&A pipeline? Are there any acquisitions expected later in 2024 and in 2025? Also, are there any updates in the inclusion in the BET index? On the BET index, it was already answered, so I will let Voicu address the M&A pipeline.
Yeah, so talking about the M&A pipeline, I guess we do have, as we discussed also previous with in the shared capital increase, we already have some projects in place. Our M&A team is working a lot in securing some of them in geography close to us, and we are continue work on those M&A potential transactions. Some of them are in the area of products that you saw already high growth and high profitability with the ARR. Some others are in the area of software services in also in different geographies. We'll update as soon as we conclude. Keep in mind that the due diligence process seems to take longer than we expect in some cases, and also foreign direct investor, it's adding sometimes up to conclusion of a certain transaction. So we are going to see results in either end of this year or 2025 in the next period.
Thank you, Voicu. I see we do not have any more questions. Therefore, thank you for all your insightful questions that you had for our management. We will here conclude the call. We look forward to reconnecting with you all at the end of February or early March, after we will publish our preliminary financial results for full year 2024. The specific dates of our 2025 financial reporting and earnings calls will be announced via current report to the Bucharest Stock Exchange in January 2025. In the meantime, if you have any questions, as always, feel free to reach out to us at ir@arobsgroup.com, and we'll be happy to provide you other updates should you need any. Thank you all very much for joining us today, and we wish you an excellent day.
Thank you very much.
Bye-bye.
Thank you. Bye-bye.